What's up, everyone? It's Scotty with MoneyVest, and markets here selling off pretty aggressively. So absolutely brutal day for the markets, with the NASDAQ here down a little bit close to 2%. We have the S&P 500 breaking down under 4,300, down a little bit over 1.4%, and the Dow Jones dropping over 400 points on the day, with the 10-year yields topping over 4.8% on the day. So JOLTS numbers definitely jolting the market pretty aggressively here, and red across the board. We've got lots to unpack and we've got lots to cover in this video. I've been doing more specific, more dedicated videos on a lot of other macroeconomic topics. So definitely do me a favor and check out those videos if you can. And I would highly recommend you spend some time kind of understanding what's going on. Even if you watch the most recent videos, you will be caught up with everything that's going on in the market. And of course, from an economic standpoint, from a labor market standpoint, from an inflation and interest rate standpoint as well. So as always, if you enjoyed this video and find it helpful, all I ask in return is that you drop a like and of course subscribe to the channel. Link to our Discord and Patreon is going to be down below. There are limited spots left. First week of the month is the best time to join. I sent out a couple updates in our Discord that, look guys, there is going to be opportunities for us to dollar cost average into and buy. There are going to be deals that are now starting to pop up. And as a result, you need to be ready. And so links are going to be down below if you want to join. Of course, get access to all the buy and sell alerts and find out exactly what our community members are talking about from an individual stock perspective, from a market analysis perspective, talking about fundamental analysis, technical analysis. Everything is going to be included with the link down below, and we'd love to have you on board. So JOLTS numbers came out at 9.6 million. I already did a specific video on this, and this is basically what triggered the market sell-off, right? This literal number at 10 a.m. Eastern, as soon as this came out, market were just straight up down because, this represents higher jobs numbers, higher job openings in the U.S., which continues to show the strength of the labor market, and this paves the way for the Federal Reserve to hike interest rates. Possibility for that, once again, increases. Again, a lot of detailed analysis was done in my previous video, so check that out, because I also go over that ratio of JOLTS to unemployed persons, which basically the Federal Reserve is trying to hit an equilibrium with that number, and we're nowhere near close to that. And in fact, we got an uptick on that number as well. Of course, Friday we've got the unemployment numbers coming out, and we'll find out more information on that as well. So going over to another reason why the market's been selling off, the 10-year and the 30-year Treasury yields rise to their highest levels since 2007. So this is something that we have been talking about for quite some time. It's been an ongoing discussion in our community and in our Discord and our Patreon and our YouTube as well. And again, this is all because of the imbalance with the supply and demand. Ray Dalio's talked about it. Ed Yardeni's talked about it. I've been talking about it for months now, that the issuance from the government is insane. They're doing hundreds of billions of dollars each week. And as a result, there's a lot of supply. There's not a lot of buyers. The market's appetite is not that strong. And well, guess what? That's going to cause bond prices to continue to sell off. And, TLT is down under 2% right now. TMF obviously having a brutal day, down over 6.6, down to 430. So I've been cautioning everybody in our Discord as well to be careful. Look, we need time. We need to wait until this normalizes before we start to dollar cost average aggressively into the bond trade at the moment, because it's going to take some time, right? Because the market is still getting used to absorbing the amount of debt that's being issued on the government side. One more thing I want to mention is that I've been posting these polls and a lot of these different market updates on my Instagram as well. So if you want to connect with me there, the link's going to be down below. The username is @CastWRP. You get access to all these stories that I post on Instagram. Again, market updates and other, really insightful, valuable information, my profit and loss, gains and losses, all those things. You can also follow along on that, and of course learn more about my personal life. So link's going to be down below if you want to connect with me on Instagram. So anyway, moving forward, this right here is a chart that I also referred to in one of my other videos, and what this is basically showing you, which is actually very, very important, is the correlation between the 10-year treasuries, which is the white line. So that white line is the 10-year treasuries, and the Fang stock, right? The Fang index. These are all big tech Fang companies. That's the candlestick chart over here, but it's inverted. It's inverted for a reason, because they are supposed to move in opposite directions, right? When the 10-year yield goes up, we are supposed to see the Fang stocks go down. Now, since it's inverted, since the Fang index is inverted, you'll notice the 10-year yield, when it goes up, Fang stocks are also supposed to go up on an inverted basis. Again, it's inverted, so make sure that you know that. And when 10-year yields go down, Fang stocks also will go down, again, because it's inverted. And that's exactly what's happened in the past. You'll notice that they have both moved in the same direction. They both come down, simultaneously. They've both gone up simultaneously. They both come down at the same time. So they're both basically moving in the same direction until more recently, where you'll notice that this divergence has, widened aggressively. As the 10-year yield has continued to move higher and higher and higher, Fang stocks have also continued to rally higher and higher and higher. So that divergence obviously has widened quite a bit. And of course, today we did see a pretty significant sell-off for Fang stocks, for big tech. I mean, a lot of them were down, on the day today. So you've got Amazon down 3.6, AMD, Nvidia down over 2.5, close to 3%. Microsoft, Tesla, Meta, Netflix, Google, Apple, everything was selling off, obviously on the back of these higher yields that are now sitting at 4.8%. Up over 2.5% here on the day. So pretty aggressive sell-off. Now, I also did a poll for how high do you think the 10-year yield is going to get to? And yes, red mic, no, green mic. And will the 10-year yield get to 5%? That was the question. And I want you guys to participate and comment down below as well. And what you believe is going to be the outcome, or what you believe is going to potentially take place with the 10-year yields. Ray Dalio mentioned that they could possibly get up to over 5%. I have no doubt that they could, because of the oversupply of bonds and the lack of demand. I mean, China isn't really buying all that much, and a lot of bond traders and investors are really, kind of going through this time period where there's so much supply that they don't know what to do with it, right? They're kind of stepping away, and as a result, yields continue to move higher. So 51 people right now so far that have participated in this poll are mentioning that, yes, the red mic is here. Yields are going to get up to over 5%, and 21 people expect, yields to not get up to 5%. Maybe they expect it to get up to over 6%. I don't know. I'm just kidding. No, but under 5% is what they're expecting right now. But let me know in the comment section down below. What do you think for the 10-year yields and how high they're going to get up to? I also mentioned that volatility is out of range above 20, something that we haven't seen since May. I'll go over that chart in just a minute, and use this opportunity to dollar cost average, right? So DCA, of course, we don't need to go crazy, but slow and steady. I'll do some buying and sell some CSPs. Let's go. Get fired up for some deals. And postscript here, market sell-offs really get me excited if you haven't noticed already. And that's true, because you will start to see a change in tone. You will start to see a change in that excitement level, because when markets are down, it is, deals, flash sales, Christmas is here. When the markets are higher, honestly, I feel really, really not that excited. I feel less enthusiastic about the markets when they're going higher, because there's not a lot to do, right? All you can do is just literally sit and wait for those gains to come in. But when markets are down, there's actually more to do. So that's exactly why I want you guys to be ready with dry powder, ready with some shopping list and fair values and all that stuff. And our community is here. So if you have any questions on any specific stocks, we've got plenty of members, and we're also going to be doing a lot of research reports and analysis starting October. So I've got another equity analyst part of the team, and she's going to be helping me with a lot of research reports that I'll be sharing with a lot of individual stocks with all the members. So again, part of the links are going to be down below if you want to be a part of our money investing community. So this right here is the heat map. Everything red. Flash sale, Nvidia down 3.4, Microsoft, Amazon, Tesla, Apple, the entire financial sector, semiconductors, comm services, healthcare. We got technology, real estate, everything selling off. Utilities getting a little bit of a bounce back higher. Yesterday was brutal for utilities. And I also did this video yesterday talking about don't celebrate just yet, right? Don't be fooled by the potential gain that we saw yesterday, and that was precisely for the very reason that we are very much still in a downtrending channel. Now, I'm going to be honest. Look, I did expect a short-term technical bounce considering how oversold we were for a lot of these individual stocks, but market had different plans. Bears are fully overpowering the bulls right now. In fact, bears are outnumbering the bulls right now by 1.5 to 1, and as a result, we are starting to break down below these support levels and, of course, selling off even further. All sectors are down except for utilities on the day. All sectors are down except for comm services on the week. And pretty much all sectors, all 11 sectors are down over the last 1 month. Volatility spiking here, as I mentioned earlier. Natural gas is up, and every other future and commodity is lower. And of course, we are seeing Bitcoin and Ether also consolidate sideways at the moment. So coming back over to the volatility here, 19.8 is where we ended up closing, up over 12.5%, a little bit under 20, but of course, a huge spike, levels that we haven't seen since May of 2023. So last time we were at those levels, again, was a buying opportunity for us, right? Because volatility ended up dropping pretty aggressively down about 36-37% from those levels, and of course consolidated sideways for some time. And I definitely saw a bit of a pullback, back to those levels. And of course, now we're starting to see that very nice spike back over 63% at the moment. Now, crude oil prices kind of stabilizing a little bit, still under $90 a barrel, up over 1% here on the day. And Ether, back down to that support, that higher low that we talked about in one of my other crypto updates. And it's been trading in that range. So very strong support in this green rectangle, sitting around 1100, and a resistance all the way up to 2100, 2200 levels. And Bitcoin obviously has been trading in that range as well. Very much in a little bit of a rising wedge pattern. Support level very strong at 15,000, and a resistance sitting right here at around $31,000 for Bitcoin. Now going over to the S&P 500. So this right here is going to be the chart, and as unfortunate as it is breaking down from that mother of all trend lines. So if I basically remove everything from this chart and simply go over one simple trend line on the weekly time frame, which again we broke down in one of our previous videos. So this right here would be that trend line for S&P 500, and you'll notice that we're not quite breaking this down. So I wouldn't suggest that we are breaking down this level. In fact, we are down on the week, so we're down 1.37%. But the moment we crack below this 4,200 level is the moment we need to brace ourselves, because that will be a brutal sell-off. That will be a brutal breakdown here for the S&P. So we're like literally hanging on by a thread. If the bulls don't show up rest of the week or next week, well, then you better believe it. The bears are definitely going to try their best to push us down even further below this higher low, and it's possible that we continue to see some more potential downside. And as I mentioned before, like, look, 4,000 is my fair value on the S&P 500, but 3,800 would be ideal because it would be undervalued at those levels, right? So again, I want you guys to understand the difference between fair value and undervalued levels. And right now we are going to be watching 4175. So this right here is going to be that next level to watch, and a potential breakdown below 4,200 will and could be brutal for the markets. NASDAQ here also hovering around that lower low at 13,143. So, we're starting to see a bit of that weakness continue to play out, lower highs and lower lows. A breakdown below this level could send us down to 12,200. That's going to be about a 900-point drop for NASDAQ, and that's going to be that next support, unfortunately, for the index. But look, bottom line is, I want to be very clear. If S&P 500 comes down to 4,200, look, none of this is financial advice. So I want you guys to understand, read the disclaimer. None of this is financial advice. Do your research, do your due diligence. But what I'm saying is that 4,200, that's going to put the S&P 500 down about 13% from its all-time highs. 3,800 is going to put us down over 20% from its all-time highs. I don't care. I'm going to be a buyer at those levels. At 3,800 would be ideal. But even at 4,000, I understand the probabilities and statistics. And statistically speaking, it's very rare to see the S&P down over 17% from its all-time highs. And I will be looking at buying opportunities, period. We'll be dollar cost averaging blindly, like literally throwing money into a fire pit. And I know it's painful. And I know that it's going to be something like, markets are going to crash even further, and there's going to be more headlines and bearish headlines. And like Peter Lynch says, there's going to be even more reasons for you to worry about, right? There's going to be always reasons for you to not invest. And that's the moment. That's the time you start to kind of behave in a more contrarian manner. Look, I wasn't cheering on to be investing at these highs, right? At 4,600. In fact, if you go back and watch my videos, I was cautioning people. We talked about how valuations are higher. We're overbought. We're coming up to those levels where the risk reward isn't the great. It's not the best. But now is the time to actually start getting excited, right? Now is the time to actually start looking for market opportunities, right? So, and one more thing that I want to mention is that nobody knows when this sell-off is going to end. I can't tell you. The next person can't tell you. Nobody can tell you when this sell-off will end. So I dollar cost average knowing fully the markets can drop yet another 5% from here or another 10% from here. As long as the risk and reward continues to be in my favor and something that is actually tilted more towards an asymmetric level where the risk is low compared to the higher reward and the potential upside, I don't mind dollar cost averaging while also knowing fully the markets can indeed drop even lower from these levels. And guess what? That's going to make the risk reward even better. So that's the mindset that I want you guys to get into. We're not trying to predict. We're only trying to understand the risk and reward and dollar cost average along the way, slowly and steadily. The lower the better. The lower the prices come down to, the better the risk reward is going to be. And the lower the prices, lower the risk it carries. Now going over to Apple. And Apple here, lower highs and lower lows, sitting roughly around 172, 173. Still very much in this downtrending channel. So we've already been tracking this level. Next support is going to be 157. That would be very, very nice for Apple stock. And of course, resistance all the way up to as much as 179, close to $180. Talking about Amazon. So this right here is going to be the overall chart. Again, lower highs and lower lows. Support level is going to stay put right over here at around $121, $122 per share. And of course, resistance all the way up to 138. And we've got a little bit of a gap to fill for Amazon as well. Talking about Tesla, and Tesla here just hovering over $240. So that is really good. Tesla continues to validate that support, at least for right now. And, in my opinion, the moment it breaks below $240 is when things will get really interesting. And I wouldn't be surprised if you do see a bit of a breakdown. If you do, of course, low 200s is a possibility inside this green rectangle. We already did get the delivery numbers for Tesla. They missed by a wide margin, but overall, they still reiterated for the entire 2023, 1.8 million deliveries. That's going to be up 38, close to 40% on a year-over-year basis. Or is it 1.8 divided by 1.3? That's going to be about, 38.5%. Is going to be that increase on a year-over-year basis. So 240 is the level to watch. Tesla is consolidating sideways and not really going anywhere. Nvidia here on the day also pulling back. It is definitely making a little bit of that lower high right now. So this right here can be considered as a bit of a lower high for Nvidia, while also keeping that horizontal support intact at around $400 per share. So, lots of consolidation. That's going to be that support. We've got a huge gap to fill. And of course, we've got that ascending support and that higher low sitting right over there for Nvidia. Talking about advanced micro devices, and again, very much in the context of this downtrend. So lower highs and lower lows. So this right here is going to be that lower high. And of course, we're consistently trading in that downtrending channel while also validating that support at about $100. And it closed just over $100, like literally barely over $100, even after being down 3%. So that is still going to be that support level to watch, of course, in case we break down further and the NASDAQ continues to sell off. Low 80s are going to be the next level to watch, and I will be very much looking at selling puts at those prices for advanced micro devices. Talking about PayPal, and PayPal here on the day down to $57. So this right here is going to be the level, selling right back down to that support that we've been talking about, coming down to almost a new 52-week low. Resistance, and that target's going to be back up to $69, close to $70, and that gap fill also potentially in the future. But Alex Chris has taken over PayPal now fully. I'm going to be waiting for his first press conference, his first speech, to kind of understand where PayPal is potentially headed and what's the objective with the new leadership with PayPal as well. So it's going to be very, very important. So support level at $57, $58. Going over to Block and Square here, also selling off further, down another 3%, breaking down under $42 support here, unfortunately. And well, next target is going to be 34. And Square definitely has had a brutal last 4 weeks. Especially in the last 9 to 12 weeks, it's just been selling off down almost 50%. So next support, unfortunately, $34, incredibly oversold right now. So, risk reward definitely looking very attractive at these levels, but we have to be careful considering that the selling pressure is so strong. We need to be patient before the selling pressure exhausts itself before we start to look into this. Going over to Meta platforms, and Meta here, still very much in the context of this downtrend. So, you'll notice that we are still flirting with that lower high. We're still not able to successfully break outside of this lower high pattern here. And we're continuing to kind of, trade within that channel, making lower highs. And that next support, of course, is going to be at 275. So very, very strong area of support for Meta at those levels. Talking about Netflix, and Netflix here, seeing some buyers to step in, but still at a support right now. So still very much, within the context of this green rectangle. And of course, we're seeing some buyers stepping in and at support at around 375. Resistance is still going to be at closer to 398, close to $400, all the way up to 452. Going over to Google, and Google here, also dropping a little bit, down over 1.3%. So back down to under 133. Resistance all the way up to 139, support level at 126. So mostly consolidating sideways at the moment. And we did see a little bit of a breakdown from this rising wedge, but right now we're just consolidating sideways at the moment. Microsoft, on the other hand, continues to trade in this downtrending channel, although getting validated at that support at 311. So we have a support at $311.09. So this right here is the green line as a support, and low for the day was $311.21. So it's not a coincidence. We understand the technicals very, very well for these stocks, and they're getting validated right now at those prices. So that support level, very important level to watch. Shopify on the day also selling off pretty aggressively, down almost 5% here. So, breaking down, coming down to almost fill this gap and getting rejected at $54, $55. So this right here is going to be that resistance and support level all the way down to $44, and that will also fill that gap for Shopify. And finally, we got Enphase. Now, this is exactly what I was worried about with Enphase, that, technically looks really weak. It came down to $111, and we are still within the context of this good deal level. But I did a video on Enphase earlier today, so make sure that you do check that out. But right now, we're at a very critical support. If Enphase breaks below $108, $109 per share, well, it's possible that we get down to sub 100, possibly even $92 as the next support for Enphase. It is also being shorted pretty heavily, about 11% increase in short interest, now sitting at almost 10% short interest at the moment on the public float. So I hope you guys enjoyed this video and a complete update on the markets. We had lots to cover, but hopefully you got some valuable information out of it and some call to action on your own plan and your trading decisions. But let me know if you have any questions. Look, reach out to me, join our community, engage with other members, because look, these are exciting times and you need to be taking advantage of these, because these opportunities don't come in every month or every quarter. These are rare events that happen very, rarely, very infrequently. And when they do appear themselves, you have to take advantage of those opportunities so that you can build yourself up for the next potential rally, for the next potential bull market. And that's the way, we think about risk and reward. So link's going to be down below if you're interested in joining. So always, happy investing. I'll see you all in the next video.